Yeah, so and then
Good morning, everyone. My name is Denise Lucy, and I am the Executive Director of Dominican University of California's Institute for Leadership Studies. I'm also a professor of business and organizational studies. And I'm so happy to welcome you today to our Business Edge Breakfast Briefing Series. Dominican University and the North Bay Leadership Council have partnered for over a decade to offer this Business Edge Briefing Series. And together, we have welcomed business owners, organizational leaders to share their strategies and techniques for business to be more resilient and competitive in the domestic and global marketplaces. Our goal for these briefings are to ignite innovation, to inspire creativity, and to increase profits and productivity for your companies and your organizations. Who are our speakers? Our speakers are engaging, exceptional business experts who inspire and educate our business leaders to survive and thrive during tough economic conditions. We are so thankful to Bank of Marin for our Business Edge Briefings sponsorship. Bank of Marin is the leading bank serving Northern California businesses and communities, built on trust and relationships and legendary service. And they've been our supporters for so long, and we can't thank them enough for being a great bank and for supporting our community and this program. We also have partners. Our community partners for the Business Edge Briefing series are the San Rafael Chamber of Commerce, the CEO Club of Marin, the Marin Economic Forum, and other partners, two other partners that are located on our campus at Dominican University's Borowski School of Business. They are the U.S. Commercial Service. The Commercial Service is the lead trade promotion agency for the U.S. government that provides counseling and support by trade professionals to help U.S. companies export or increase sales to new global markets. And their office is in our business school. Marin Small Business Development Center, also called SBDC, provides no-cost business advising with experts and assists small businesses with obtaining pandemic funding, HR support, e-commerce, social media setup, pivoting strategies, and so much more. And this year alone, they've helped 1,300 businesses. So we welcome you. Take advantage. Come to the university's campus and work with the Commercial Service and the SBDC. To introduce our presenters and to moderate our program and our terrific, amazing partner, Cynthia Murray, who is President and CEO of the North Bay Leadership Council. Cynthia, could you please tell our guests about NBLC and then I want to thank you again for introducing our presenters and facilitating our program today.
Denise, I'd be delighted to. It is a pleasure to be here today. We have such an exciting program. I am not getting ability to turn my video back on. There we go.
There you go.
Thank you.
Thank you.
I really couldn't be more excited about our subject today. It's one that I've wanted to learn a lot about. We have two great presenters. North Bay Leadership Council is an employer-led public policy advocacy organization, and this is the kind of things that we love to support. So glad to be a partner with Dr. Lucy and Dominican. Housekeeping is, I'm sure you're going to have questions like I do. You can put them in the chat as our speakers go along, or at the end, when the presentations conclude, you can put raise your hand feature, and I will call upon as many people as possible. So our first presenter today is Fred Doppel. He is a recognized authority and thought leader within the asset management industry and has advised many of the world's leading institutional investors on portfolio issues and solutions. Fred is the chair of the investment committee at Private Ocean, a wealth management firm headquartered in San Rafael. He's also a professor at the Borowski School of Business here at Dominican. Previously, Fred was managing director and head of the client advisory for BlackRock and has a PhD in engineering in economic systems from Stanford and a BS in mathematics from Massachusetts Institute of Technology. Welcome, Fred. We're so excited to hear from you today.
Thank you. Can you hear me?
Yes, we can.
Okay. Great to see you. I wish I were there in person. Let me share my screen. Okay, can you see that? All right. So I was asked to speak about the focus on the investment aspect of cryptocurrency and also to provide an introduction because we have a very diverse audience of business people, students, and faculty involved here with different levels of experience in this topic. So I'm going to start first with a humorous definition of cryptocurrency from the comedian John Oliver. He says, Cryptocurrency is everything you don't understand about money combined with everything you don't understand about computers. Now, that is pretty funny because there is a mystique involved around cryptocurrency. A lot of people do want to learn more, and we're going to try to demystify some of these aspects of cryptocurrency. First thing I'd like to talk about is the technology underlying cryptocurrency, and that's called blockchain. It's a critical technology that is decentralized, it's shared, it's continuously updated ledger. Its history cannot be changed. And to verify these transactions, to put things on this permanent ledger, cryptographic puzzles are solved. Hence, the word crypto occurs before many things that are generated by the blockchain. And I'd like to say right here that this technology is truly amazing and mind-blowing. It means that trades in value between you and me can occur without the presence of a trusted central authority. We can do that on our own with this decentralized network. We can even have contracts between us that are where normally we would have required some central authority. We no longer need that. So it's an absolutely amazing kind of technology. Cryptocurrency is a digital currency that's based on that technology. It's intangible. It's an online digital wallet you have that's protected by your password. And what's importantly, it's not backed by any government or corporation. All right. And then Bitcoin just happens to be the most popular, one of the earliest and most popular cryptocurrencies among many thousands of cryptocurrencies are currently traded. Some others that are, you may have heard of that are very important are Ethereum and Ripple. So why are we talking about cryptocurrency? Why are we talking about it today? It's because it's an incredibly important topic that could have huge repercussions for our financial system and the way we conduct our lives. And if you look at the growth of cryptocurrency in terms of the amount of assets involved, but also the price of the cryptocurrency over time, it's had a phenomenal growth in value. So here we're showing a chart from 2014 to the present of the value of one Bitcoin. And you can see it's been almost an exponential type of growth with some notable bumps along the road. Other cryptocurrency, most other crypto follows this kind of a pattern. And so the question you might have is, well, I think the first thing I'd say is I wish I had put about $10,000 in this in 2014 and then cashed out now. But you might also say, is it a good investment now? Is it a sure thing that Bitcoin will rise? Is it inevitable? And I'm going to bring some points out that might question that claim that some people have made that the rise of Bitcoin is inevitable. So if we're calling it a currency, I thought we might want to put it in perspective and think about what's another example of a currency. Let's say we take the British pound in US dollar terms. And by the way, I could have used the euro, the yuan, the yen, other developed market currencies, but I just chose the British pound. And that's represented in orange here. This is over the same time period from 2014 to the present. And it shows the return in value, the increase and decrease in value to relative to the dollar of that currency over that whole period. And I think you'd say, okay, currency is pretty volatile. I know you know that exchange rates change all the time. And so there's some volatility. But we can also say from this chart, because I've plotted the S&P stock index over the same period, the same way, the returns to the market month by month over this period, we can see that there's wider swings in the green than there is in the orange. In other words, stocks are a lot more risky than currency. And so currency really is not that risky in general in the big picture. So this is to give you a little perspective on that when we move to see what's going on with Bitcoin. So keep this image in mind. And then what I'm going to do is I'm going to put Bitcoin on this same chart, but I'm going to have to change the scale a little bit so it covers some wider swings that are present in Bitcoin. And here it is. So here we show the month-to-month swings in the value of Bitcoin in US dollar terms. And what you see here is some really wide swings just on a monthly basis, swinging up over 60, 70%, or swinging down 40% in a few cases. So this is a lot of volatility. And the way this has been scaled with these changes in Bitcoin month to month, changes in value up and down, you can see that the stocks, even stocks, look flat in comparison. It makes stocks look like almost constant in comparison to the changes in Bitcoin. And the chart here sort of gives you some measures in terms of a British pound, a US dollar. Again, I could have put it a euro to a dollar, or other developed currencies, or the British pound to the yen. The annual volatility, meaning the spread of variation in value relative to the other currency, is about 8% per year. Okay, and that's a good number. That's a number that, if you go back decades, it's a fairly good number to use. Instead, with Bitcoin, you see a number that's almost 10 times as large. Okay, so a lot more variation. So I think based on this, I think you could say that we call it a cryptocurrency, and I'm looking at Bitcoin in particular here. It doesn't really behave as much like a currency. It's much more volatile. So, what we do in the business school when we teach money and banking and some other finance courses, we actually go through and say, what is money? What's money? What's the definition of money? What's the criteria for money? And there's a whole list of conditions. One of the first conditions is as a medium of exchange. Certainly, check. Bitcoin can do that extremely well. Another is uniformity. That a dollar is a dollar, a Bitcoin is a Bitcoin. It's portable, hold it in your pocket or have it online. It's divisible into tiny units. There's a limited supply of it. And in those cases, I would say check mark plus, because in many cases, cryptocurrency does a better job than our typical fiat currency. So far, we're good on that. And then again, the issue here being stable value, where the value of it is moving up and down, which makes it difficult for me to say, I've got Bitcoin, what can I buy with it in the future? I may be able to buy more or less in the future than what I can buy now with it. Where with dollars, I face that issue, but it's more of a smaller level of change. Now, with that, I should point out that I'm talking about regular cryptocurrencies. I think Rob might spend some time later on stablecoin, which are cryptocurrencies. They are cryptocurrencies, but they're tied to some other asset, and that asset could be a fiat currency, for example. It could even be a central bank kind of cryptocurrency. In that case, those kinds of coins that are the stable coins have a stable value. They've been shown to have a fairly stable value, those based on a fiat currency, okay? Well, then the other problem is it recognized as legal tender by the government? And that's not currently true unless you're in El Salvador over the last couple of months, okay? So there's a problem, there's not legal tender. Now for me, you may wonder what I'm doing with this picture here on the left, which is a knight paying homage to the king with a bag of gold. And I'd like to point out that we all have our overlords in this world. We all have our overlords. My overlord is the Internal Revenue Service. And every year I have to pay them their due. And currently, it cannot be used to pay taxes. They won't take any crypto that I have to do that. So for me, that's a little bit of a bottom line. Now, that's not all bad. I mean, it sounds negative, but it's not all bad, because with cryptocurrency, I would say, while it's not satisfying all the conditions of money, it's satisfying many of them, but it is more, what would I call it then if it's not money? It's an intangible asset that you can barter with. So I can say, I have this Bitcoin, and how much do you need to exchange a service for that, or exchange a physical item for that? So I can barter with it, It's an intangible asset. But then the question is, what is it actually worth? Is there sort of a fundamental value underlying it? So some people might say what you paid for it, what the current price is a good number at a point in time. But I'd like to think in terms of what I call the intrinsic value of it. Intrinsic value would be like, let's say there's a house in San Rafael that's selling for $5 million. That's the price. What's the intrinsic value? Well, I could look at an issue where I could purchase the same kind of property and build a house at a cost, and I could build a house from scratch on that cost that would be equivalent or better to that house, and I could do that for $2 million. So in that case, the intrinsic value of the house would be $2 million, and I'd say, hey, the price of $5 million is too high. How about $2.5 million or whatever? So that's how I negotiate. What's the intrinsic value? And that goes for when you think about a business or any other kind of asset. What's the intrinsic value? If I'm paying X, what's the intrinsic value Y? And I want X and Y to be fairly close together. So I became interested in that question, and I did an experiment and wrote a paper called Confessions of a Bitcoin Miner, which will be available to you. And you see here on the right, my actual home-built virtual reality machine, which I converted to a crypto mining rig. And what it seemed to me is that there was an intrinsic value to Bitcoin. I think Warren Buffett says it's worth nothing, but I say it's worth something. It's worth, at the minimum, it's worth the embedded electricity and computing costs that it takes to kind of earn one by contributing to this ledger, right? So it's explained more in the paper, but basically my experiment found, and this is a couple of years ago when the price of Bitcoin was ranging between $10,000 and $12,000 a couple of years ago. And I found that this intrinsic value of Bitcoin was much less than what the current price was, that I could produce Bitcoin much more cheaply than that. And think about it, this is my machine that I made, right? I'm not an expert, compared to people that have really purpose-built machines and perhaps subsidized electricity in order to produce things. So we're competing against them in terms of and in many cases in countries that their electricity is based on cheap coal generation. So on that basis, I would say that there's a speculative element to Bitcoin in terms of the current price now. I wish there weren't. I wish that the price were more stable, but it sort of prevents me from thinking about investing. If I decide to invest in Bitcoin now at price maybe $50,000, then it's a speculative thing. There's got to be some other future logic of that it's taking over the world in order for me to make some judgment on that basis. So if that's the case, what's driving the popularity? Well, one thing is what we call is a technical term in my business, which is private wealth management now. It's called FOMO, and that's when a client calls, and they do call when the price of cryptocurrency goes up, and they say, why haven't I had crypto in my portfolio? And they don't call when the price of crypto goes down, which is about half the time. They don't call then. So there's a fear of missing out. There's a coolness factor, and I'd say beyond coolness factor, it is cool, period. And it's about one of the coolest things I can think of. There have been some incredible use cases. If you had someone who was left behind in Afghanistan, for example, you could transfer value to them through cryptocurrency brokers that were operating through the recent conflict and issues there. However, if you were to try to do it through a bank, you would not be able to do that. The bank system was essentially failed. So think about that, about reaching hard to reach places. Think about reaching people that may not even have a bank account, that instead maybe have a cell phone, and they can do transactions on cell phone, but they not have a bank account. So it's incredible to think of the opportunities there. And then we see more and more businesses taking crypto as payment. And that is also driving the popularity and the speculation on cryptocurrency. So some notable examples here: Burger King in Venezuela, Coca-Cola, Whole Foods, Starbucks. So you can walk into a Starbucks, use the app and buy a Frappuccino and pay with Bitcoin, okay? But when you do, it's sort of an interesting question. That's very convenient. It's an interesting question. Suppose you bought that Bitcoin at $10,000 and now it's $50,000. That might trigger a capital gain, actually. Might owe some taxes, additional taxes, in addition to the cost of your Frappuccino and croissant. So that's a question I'll leave to the tax experts, but I find it kind of interesting and hard to track that kind of information. Tesla is a really interesting example. You know, and you may know the story, but I'll just repeat the key items. Back in mid-February, Elon Musk announced that he had purchased in January $1.5 billion of Bitcoin, $1.5 billion of Bitcoin. And he announced at the same time that he would now be accepting Bitcoin as payment for any model of Tesla. What do you think happened? Well, the price of Bitcoin skyrocketed. That's good. It was good for his investment. And then 3 months later, in May of this year, he reversed his decision to use Bitcoin on environmental grounds. And the price of Bitcoin tumbled 25% in just 1 week. So while, you know, more and more the fact that businesses are accepting this, I think, is a general positive, you got to realize that that's going to cause additional speculation in the market. So it's a factor driving the volatility of Bitcoin is this kind of news. Now, I'll get to kind of what my expertise is on the investment side, the general investment side. Most of our clients are people who have worked hard all their life, have built up a nest egg, and are going to be using that in retirement. So we have a real duty to protect those assets. So I would lay out some minimum conditions for investing in cryptocurrency. They actually apply to investing in many other things as well. One is, before you invest, understand the intrinsic value, whether it's crypto or it's a house. The ability to buy it at a fair price relative to value. And a conclusion that you'll get a satisfactory expected return from the investment in this intangible asset, consistent with the risk that's involved. The risk is currently fairly high. So anyway, that's a little bit of sort of a framework thinking about how you invest in anything, applying that to crypto. I would say currently not ready for prime time as far as my clients are concerned. But I must admit that my former clients, back when I was working in the institutional investor environment, those clients now are taking a strong interest in making small allocations to cryptocurrencies. They're trying to learn about the whole marketplace, as well as making a small investment in various kinds of cryptocurrencies. So I'd also like to say that there are also many other investment opportunities in the broader Bitcoin ecosystem. Okay, so outside of crypto itself, owning the coins itself, there's all these companies that facilitate transactions and software and other things to make this kind of happen. And that's really kind of an interesting area. Some of those names went public this year, for example, Coinbase. Also, you know, there are many different applications of mentioned stable coins before. Stable coins are more like money and less like an investment. Regular crypto is like an investment and not as much like money, but there are many different applications of stable coins coming. So anyway, that's an interesting topic there. So let me just conclude. My time's up. I've already talked about the investment side. On the second, get phone calls all the time through my watch. The business pros, I see big business pros of doing this. If you have this new kind of payment option, that's going to attract new clientele, the kind of clientele you want, young tech savvy people, also maybe hard to reach people as we met before. Better security in terms of payments and avoiding some types of fraud, lower financial intermediary fees. I mean, this is really big for banks. If you're a bank, this is really a big deal because this is disintermediating a lot of things that that banks would do. And then in terms of the cons, well, I already mentioned the volatility of cryptocurrency. So just caution on holding, make your own choice, caution on holding it as an investment. And that would mean that if you have a business accepting this, then you either want to sell it fairly soon, or what you want to do is you want to find some way to hedge out the risk associated with that. So great idea to use this to bring it in as a form of payment. It's the future. It's the future. But then just caution currently in terms of investment levels, given the current price of crypto. Uncertain regulations and tax matters. Yes. And not only that, accounting aspects and record keeping that you need to do if you're a business. Operational challenges, technical expertise required. And very soon you're going to hear from Rob Massey. There's no better expert in the business who can help address some of these kinds of issues. So in terms of the long-term future, hard to predict, but I think that some level of regulation that's sensible and fair and transparent would be very helpful to the overall marketplace. More and more adoption by corporations and governments would be very helpful to the marketplace. And then as to blockchain technology, I think we're just at the beginning, very promising. And we should think of cryptocurrency as just really the first example of an application of this technology. So with that, I will yield back to our moderator, Cynthia.
Thank you, Fred. That was fantastic information, and can't wait till we get to the Q&A. Our next presenter is Rob Massey, who has over 20 years of professional experience in tax consulting for technology companies. Since 2013, Rob has focused on blockchain, digital assets, cryptocurrency, and tokenization. He serves companies throughout the blockchain ecosystem, inclusive of investors, miners, staking providers, payment processing, wallet hosting exchanges, hedge funds, tokenization, and protocol development. Rob leads Deloitte's blockchain efforts in tax for the global firm. Rob's blockchain expertise expands the comprehensive tax considerations of blockchain-enabled transactions and the analysis of the tax impacts of tokenization and digital asset transactions across various business models and industries. Rob, let us know what's on your mind today.
Thanks, Cynthia. Are you able to see my screen okay?
Yes.
Excellent. Okay. I'll first say, Fred, excellent overview. And, it's easy to get caught up in the headlines about crypto and Bitcoin and everything. But I think the perspective you shared, Fred, was balanced, which I think everybody needs to really hear and understand. This is a critically transformative historical time for all of us that goes well beyond crypto as a means of payment. It is really elevating what commercial activities allow vis-a-vis smart contracts, because remember, this frequently gets to the point of programmable money. So you can do more with crypto than you can with fiat. And I'll explain what I mean by that. Thanks for the introduction. What I'm going to do is give an overview. I spend all my time in this space, by the way. We serve clients throughout the ecosystem, as Cynthia referenced. And we're going to get into some topics. I'm going to demystify a little bit about what these digital assets represent. What do they do for business? We're going to talk about the ecosystem and then talk about some business considerations. Fred indexed hard on the investing side. I'm going to span more to the using it in the business side. And as we said, keep those questions and we can deal with those at the end. First of all, Fred spent a lot of time on Bitcoin. He referenced stablecoins. There's a lot of digital assets out there. I'm going to use the phrase digital assets. Some will say crypto. There's a general term which spans lots of different categories of digital assets, which we'll talk about. There's mainstream crypto. Can you believe we say this? Mainstream crypto, but it's true. So Bitcoin, ETH, very decentralized, been around for a long time. Those more used as a store of value, sometimes a means of exchange, a barter transaction like Fred mentioned, but a little less utility on their own. I'll explain why. The stable coins, this next strata we're talking about, this pulls out the volatility that Fred was mentioning. Critical. When you're using crypto in a trader business, you don't want to worry about taking in Bitcoin as a means of payment now, and it goes down in value before you have a chance to flip it to fiat. So income stable coins. Stable coins are a digital representation of fiat currency. When I say fiat, I'm not talking about a car. I'm talking about central bank issued currencies. So we have digital representations of US dollars, of yen, of pounds, and all the rest. That does not mean a CBDC, a central bank digital currency. It means that you have private enterprise issuing a digital asset. Many of them are holding a dollar in the bank on your behalf. That translates to you as a bailment or a debt instrument, which was probably beyond what we need to get into, but how it represents to the holder is significant. Stablecoins don't move in value, but they're moved on blockchain. Many of them are Ethereum-based digital assets, which allows them to be programmable if you use them with smart contracts. Some stablecoins do have a dollar behind them. Others will be algo-driven. And so and not all are constructed equally, I guess, just to say it. Another strata, tokens of general varieties. In 2017, a lot of people were using the phrase utility token. That meant that it was built on something like Ethereum. It was a token, maybe widely distributed, maybe not, but it granted you access to a platform, like a membership fee, basically like a subscription fee. It did something different. But importantly, the concept of programmable money was born. So if you had a smart contract, which is basically a digital representation of contractual terms between parties, but inked in code as well as legalese, and you had a token, programmable, which was used as a means of payment. The token hit the smart contract, which governed who has rights to those contractual terms. Oh, well, there's a commission that goes here, there's a royalty that goes here, and there's another payment that goes here. That token then would split real time, governed by the constraints of the smart contract, and provide real-time remuneration. That's what utility tokens do. We saw a lot of that built in 17. We still see it today. Other tokens, specific asset backed. We see digital representations of gold, of diamonds, of palladium today, even fractional interest in real estate starting to be digitized. This provides greater utility, greater transparency, and really governed by the different industries. DeFi is a big deal, decentralized finance, pulling out a centralized exchange or a known intermediary. People now entering into concepts like Uniswap and SushiSwap and Aave Balancer, whereby you can move your digital assets in, enter into a smart contract, it will spit out a return. And what you are looking at is instead of reading legalese terms of a contract, you're looking at codified terms of a contract, then earning returns that way. Decentralized finance, very, very big industry right now. And NFTs catching the news, non-fungible tokens. So you see it, all the silly monkeys out there, digital representations of art. You see NFTs also with song rights. You're seeing it with sports and media. So digital representations of a thing, non-fungible, which again, govern the rights. Think about an NFT as a transferable body of rights to an underlying piece of property. It may be all the rights, allowing holistic transfer of that property. It may be a subset of those rights, but importantly, it governs those rights. Again, you then have a stable coin entering in that then allows real-time remuneration in the use of those rights. Digital securities, digital representations of equity, of debt. Don't get confused when people use security token, that's a securities law definition, then that may not bear weight from a tax or accounting perspective, as many of us worry about that. So equity tokens becoming popular, debt instruments becoming tokenized, and then other derivatives. And central bank digital currencies, the reason that banks are leaning in, to Fred's point, is because their customers demand it, but to replumb a bank to allow a different digital asset type, a different representation of value, something that which is not currency, this is hard to replumb a bank. Banks are entering now this space, gearing up with digital assets so that it can be ready for CBDCs. It is well known, most major economies around the world, including our own, are looking at, central banks are looking at issuing their own digital representations of fiat currency, which will then allow programmable money throughout their economic circumstance, which allows for great velocity, a lot quicker movement of funds. So this is coming online. We do see it already in China and in Russia, but it is being tested throughout the world. A lot of healthy political debates there, but just know that's where that's going. Everybody knows it, and that's why the big institutions are gearing up. Another point I want to get into is about the ecosystem. What does this mean? And I think a lot of you today are business owners. You're operating businesses. You are sitting here, which I'll call corporates, but there's a lot that goes on allowing the digital asset ecosystem to work. A lot of it comes back to custody. Custody is really the center of the universe today. It is different to custody digital assets than it is securities or commodities or fiat. It just is. There's a lot of different technological considerations. There's regulatory considerations. There's amounts of access and control, and KYC AML is very, very different. But the custodian will hold it, but digital assets are used. How are they used? They're used on these public protocols. This is different. Public protocols don't work because of magic beans. They work because there's somebody in the background. Fred mentioned mining. The role of a miner is not just to make money. You're allowing the ecosystem to work. A miner, what is a miner doing? They're validating transactions on the Bitcoin protocol. If you are staking your assets on another protocol, let's say you're staking atoms as an example on the Cosmos protocol, you are allowing a consensus mechanism to work. You're validating transactions. So there are all these enablers in the ecosystem which allow each different public protocol to work. Then you have the different actors, the custodians, the exchanges all accessing the protocols, recording those transactions, allowing the transfer of value, which Fred mentioned. And there's different protocols. They work a little bit differently, but they allow all of these different digital assets to exist, frankly. Many institutions today, you can see the headlines, they're not ready to custody, but they want to allow it for their customers. So they're engaging with sub-custodians. Crypto native custody services, Fred mentioned Coinbase. There's also NYDIG. There is Gemini. There is BitGo. They've grown up allowing custody of digital assets. And now the banks, the large banks, accessing those providers so that they can bring digital assets to their customer base. A lot new of asset managers. I'll tell you, there's a lot of crypto native funds that have been developed, but it's also all the big brand names evaluating it. And if they're not in it today, they're figuring out how and when. The how is important. Most people don't make the decision to dive into this pool until they understand the how. And the value proposition, I think, is pretty well known. So if you are going to use this in your business, what do we need to think about? And the common reasons that you will lean in are because you want to receive it from your customers or you want to pay a vendor. Now, it's complicated to touch it. So you can use a payment processor. There are crypto-based payment processors out there that means they will accept crypto on your behalf, convert it to fiat on a real-time basis, take a little fee, and then send you a wire ACH transfer to your bank account on a real-time basis within the day. You don't have to worry about the volatility because they'll convert it on a real-time basis. That works fine. And a lot of people choose to do that. They will then take the burden of KYC, AML if you have funds coming from people you don't know. Others will say, gosh, I want to custody it myself, or I want to take it from customers and I want to start building a little bit of my balance sheet. I want to start building an investment in crypto. You might do that as well. Know that there's different contracting mechanisms. You might keep your dollar denominated terms and then sell in crypto or take crypto. That's one thing. If you don't determine instead to set your contracting price in crypto and it moves, as Fred was talking about. The A's did this not long ago. They said, hey, we will sell you a suite at the stadium for 1 Bitcoin. Well, that's not the same number translated to US dollar in the morning as it is at night because the dollar moves. So now you have something that's moving in revenue recognition, which from an accounting perspective creates a derivative. You then say, okay, what do we do for tax? Well, revenue recognition for tax means when you have a fixed right to receive. And because the value is moving between the time you agree and the time you receive payment, you think about when do you record revenue in the first place. So a lot of unique tax considerations here. This is where I spend my time. Again, I'm a tax partner, and basis tracking is a really big deal. We have digital assets that move in value. If you were taking Bitcoin for a pizza 10 years ago, you would have basis of $8 in your Bitcoin. If you took it for a pizza today, you would have 55,400 in basis, as it is right now, in your pizza. A lot of different basis you would care about. The only way you know, though, when you're going to access that Bitcoin, if you're going to access your $8 versus your $55,000 Bitcoin, is if you put those in separate addresses. From a lot relief and basis tracking standpoint, we're not used to that. having to build wallet structures to segregate what are fungible assets into different wallets or addresses to say, if you wanted to access a Bitcoin today, you don't want to trigger a lot of game. I'm going to use that $55,000 Bitcoin. If I'm going to buy a Tesla with it, I don't want to use my $8 Bitcoin because, as Fred said, if I use that, I trigger gain. The difference in the value of the Bitcoin that I gave up compared to the basis triggers gain. I'd rather avoid that. So basis tracking is unique. A lot of different discussions around character. Is it ordinary or capital property? Clearly, there's a rate difference there as we get into that. Cross-border transactions. I will say that crypto does not cross borders gracefully. Our treaties between countries aren't used to handling things like movements of crypto. Let's get the notification there. So we really look at designing structures, particularly those who are multinationals on this call, making sure that you're designing your transfer pricing accordingly internally, or dealing with cross-border customers or vendors so that you don't have a withholding tax problem. There are a few governments around the world that'll take crypto as a form of payment, not many, but they're growing in number. Indirect tax is different. When I say that, I'm talking about sales tax and VAT primarily. And again, the rules were not set up for intangibles, they're set up for fiat. And so we do see a lot of indirect tax leakage in designing economic circumstances for our clients here. I mentioned accounting. It is different. You'll hear some of my accounting partners talk about, gosh, if you're holding it on your balance sheet, MicroStrategy, I think, is the largest example today. They're a large public company. They have roughly 5 billion in Bitcoin on their balance sheet. And when you read their footnotes, they will talk about how they will impair Bitcoin in a dip. They can't write it back out. That's an unfortunate economic rule, accounting rule that we're bound by today. There's a lot of people trying to change that rule, but that means that there's a lack of comparability when you look at two different people that invested in Bitcoin at different times. They can't mark it up. That's not the same for dealers. So just know that every circumstance is going to merit a different accounting rule. But a lot of parallels there in the barter transactions between accounting and tax and how those work. Many of the risks that we talk about, if you're going to get into this hard, you do want to spend the time. You think about, controls. How do you safeguard your assets? How do you make sure that access is restricted only to the right people? And remember, at the end of the day, these protocols, they are not governed by one body. They're governed by a community. And so that's a little bit weird to be relying on basically a decentralized software application that you then don't control. So this is inspiring some really unique conversations about how do you build controls infrastructure? How do you gain faith that you're going to be able to deal with that on a long-term basis? And so as we think about entering this space, risk tolerance and controls, big deal. Investment strategy, just like Fred was talking about, making sure that you're aligned with what it's doing long-term or short-term. Custody, make sure you choose your custodian carefully and that they enable the right level of care and hygiene that matches with your tolerance. Things like making sure they have the ability to segregate different addresses so you can keep your $8 Bitcoin separate from your $55,000 Bitcoin. And obviously keep tax and accounting in mind as you deal with it. So I'm going to hand it back to Cynthia. I talked really fast because I'm sure there's a few questions out there, but it'd be nice to have a dialogue if there's any burning questions from our audience.
Thank you both, Rob and Fred. And I have questions, and we have one in the chat so far, so I'm going to go ahead and ask that. I'm not sure to whom it should go to. Does the wash sale rule not apply to crypto trading? In other words, can you sell BTC when it is below basis, immediately buy it back and get the short-term capital loss?
Yeah, I'll tell you, this has been a topic for a number of years, and technically the wash sale rule does not apply. However, if you enter and exit a position without any element of risk, the wash sale rule would apply anyway in principle, even though the code was not written to contemplate crypto. There is a proposal which is sitting out there by Ways and Means right now that is expected to pass, which will bring crypto into the wash sale rules. But it is not uncommon for people in late December to be evaluating their positions. But if they want it to work, they will exit and then re-enter, documenting a level of risk that they can't put themselves back in the exact same economic circumstance.
Thank you.
Hey, Rob, can I just follow up on that? I was wondering about the accounting authorities. coming together and developing kind of an international standard in treating this. I don't know if that's happened yet. I mean, I read some of your the brochures and whatever you sent out, the reports you sent out that were very interesting and very educational. But I'm just wondering, like, why haven't, if this sounds to me like a really important topic, it seems to me like it should be number one on the agenda, and they should have you there as well.
Yeah, I'll say there's an awful lot of important regulators and legislators who are paying attention to crypto. So on occasion, I get to have conversations with members of Congress, and I'll tell you, there's a high level of respect for what's going on, but it doesn't always end up filtering through the media as it should. I have seen many instances of a lot of care and respect for what's going on. You see this a little bit percolating through, there's actually a blockchain caucus right now. Mm-hmm. And what they will tell you is, gosh, even though there's a debate about what the regulatory environment should look like, we have the entire legislative branch of the US government now debating on our Senate floor, what should we do for 1099 reporting for crypto? That's a big deal. We've come a long way. So I think it is on their mind. It's hard to get there, particularly dealing with an era of COVID and what do we do with the rest of the goings on in the world. But I honestly don't think it's lost. It's really just, it doesn't always translate through the media. Mm-hmm. Now that's usually tax and SEC and everything else. I think from an accounting perspective, there's actually, we don't like the answer to the rules, but there's general alignment in GAAP and then IFRS about what they should be. There's a large movement to get those rules updated to accommodate some of the differences, but there's still gonna be differences around the world.
Thanks.
Next question is, and this is, I believe, to both of you, where do you see blockchain going beyond currency?
I can give some simple examples of that. Well, I think the decentralized finance aspect in terms of most financial transactions, going without an intermediary would be one. But then there's all this other business. I mean, I think, downstairs here, let's suppose I want an Uber driver. I got to deal with Uber, right? All I care about is the driver. Perhaps I could find a way using blockchain to have an agreement and a contract about the mileage and what the payment is and a transfer of money with some freelance driver that's going there, and I don't have to use Uber and pay the overhead. But I'll turn that over to Rob.
Yeah, and I think that's right. I think every industry has been evaluating blockchain for some time. What we're finding is it's more interesting with digital assets because you have programmable funds. It just is. So think about, a classic example, which I find more digestible, is a complicated supply chain scenario when you deal with a manufacturer that, there's 30 different stakeholders along the way, all with different contractual terms and dependencies of each. Mm-hmm. Well, if you then ink those contracts, everybody buys into one blockchain scenario and you link those dependencies, what have you done? You've brought transparency, at least to them, if not to the world. Transparency matters where you are in the process, but also where your products come from. We care today. Many consumers care where our products come from. You've also unlocked the real-time payment of funds. If you move a component part from party A to the next in the supply chain, next one confirms, yeah, I got it and it's good. Quality control confirmed, you unlock. And smart contract says, yep, these three people check off. I'm going to now send stable coins to the center of that product. And everybody,
what you're describing would be a lot faster than having to go through all the normal steps.
Absolutely.
It would be very, very rapid.
This is good for us on many levels. Yep. This is hard. Just so you know, why aren't people doing this today? It's very cool. Value proposition was tested a decade ago. Mm-hmm. This is hard to build. You also need every actor in the supply chain to buy in. But I'll tell you, people are building it today. Some of the largest manufacturers in the world, this is absolutely on radar. But it's hard.
You talked about the banking industry, and when this was first talked about, it was the banking industry was the middleman, and they were going to be eliminated by this. But headlines today, U.S. Bank launches Bitcoin custody service as banks race to cater to crypto demand. So the banks have definitely figured out that they have a role to play. Yep. And so this is probably something that is going to become an essential component to the banking industry, would you guess?
Yeah, there's no large bank today, zero, that we don't talk to about where this is on their roadmap and what is their strategy.
I would
And
think some might be a little bit cautious because they don't know what all the rules are, right? I mean, they could be thinking they're doing everything, checking all the boxes, but then could make a mistake of some kind. So the more and more we get the kind of legislation you're talking about, you said they're talking about it on the floor of Congress, when we get the government, the feds involved in establishing what the rules are and writing them down, it's gonna really explode.
yeah,
Another headline today, you mentioned Elon Musk, Fred. He came out with a new doggy coin. Is that how you say the word? Named after his dog, Floki, Flokenomics. It went up 2,400% in just a couple hours this morning, which is, talk about volatility.
Yeah, well, anybody can do that. I mean, my son created, his name is Freddie after me, and he created his own coin, cryptocurrency called Freddie Coin. And he had a habit of giving out like 1 million coins to some of his girlfriends who were very impressed. Of course, they didn't know that there were trillions and trillions of coins out there with no real trading value. But nevertheless, that's very funny, very funny.
So one of our attendees says it's worth sharing that Bitcoin transactions average around 10 minutes to be confirmed. Would this not prevent many business transactions because of that delayed response?
well, I think the reality is that even though it looks like you have a real-time transaction confirmed, it's really the background, it's the banks. It takes a bit longer to sort of settle it. So the speed that digital asset enabled transactions is actually more appealing. You can actually get closer to a T+0 environment in the shifting of funds.
Yeah. Hey, Rob, I was wondering if there's any temporary effect going on with China has coming out a couple of months ago, and then they kind of repeated every week that they're banning crypto, banning mining, whatever they want to maintain control. Does that, since a lot is mined out there, does that have any temporary impact?
I mean, a lot of people in the US anyway, are including the regulators, like that the mining has shifted more, honestly, to the US. There's a lot of miners coming here. And because if you really have such a critical component of a system controlled in China, that makes a lot of people nervous. And so actually having it here has been beneficial. Mm-hmm. I think for some regulators, and it's also been, frankly, a boon for many states that have cheaper power than California. So I think it has had an impact on infrastructure and the price. Yeah,
we're getting a lot of questions, so I'm going to try and run through this as fast as we can. So, can either of you speak on the environmental impact of crypto?
I just say briefly. I mean, that was the rationale for Tesla backing out of accepting Bitcoin. It's because the mining itself, that's called proof of work, is very energy intensive. Yeah. And so someone has said it, the Bitcoin production involves like all the energy supply of Argentina. Then there's a new concept that's called proof of stake, which is going to be more energy efficient. I don't know, Rob, you have any?
It's true. It's true. A lot of the proof of stake requires much less power. Bitcoin does require a lot, and many power plants on non-peak hours, if you're running the plant anyway, then plug in the miners, and it's going to reduce the price of power, which actually helps people who have a hard time affording power. There was an interesting rebuttal written after the big news that splashed on this first, and I think it was Square that inspired it. So if you're interested in reading about it, I think that's the most balanced piece written that I'm aware of. I don't have the link handy, but you could Google, Bitcoin mining power and Square, and you'll see what was produced. It's a pretty balanced, thoughtful piece. There's a lot of rebuttals out there. If you follow crypto Twitter, you'll see a lot of them that are a little funny.
Rob, can you talk about ICOs and possible advantages or disadvantages for companies to consider crypto offerings?
Yeah, the concept of the ICO got a little bit crushed because
could you say what an ICO is?
initial coin offering. It became a bad word because you're taking in funds from people you don't know, and that violates a few rules around the world. And most have enacted legislation that say you can't do that. So now when people introduce new tokens, new protocols, they do so in a different manner. They'll do it with private offerings. They'll do it with accredited investors. They'll go through different means. So people are still delivering new types of digital assets, but it's not these wide open, concepts where you don't know who's on the other end. So the regulatory environment shifted. It was mid-18 when you started seeing the regulatory environment shift.
So another headline today is hackers drain cryptocurrency accounts of thousands of Coinbase users. And so that's something that we seem to hear all too frequently in the news about cryptocurrency. Can you talk a little bit about security and investors beware?
This goes back to controls. Trust that, build appropriate controls in your internal processes to make sure that you're covered. Make sure you're comfortable with the controls of your custodians and providers. Make sure that they have attestations by somebody who's the SOC reports, attestations of controls to prevent it. The unfortunate thing, I don't know that like a hack is the right term. It's usually some element of fraud involved in some of these. I can't speak to the headline though.
Last question. I wish we had more time, but someone is wanting to invest in real estate and wants advice on what would you give a novice wanting to put some money in real estate and wait for the upside?
Okay, that's an investment question. Well, there's a lot of speculation in real estate as well, right? If you look at prices, say in San Francisco and the Bay Area. So it's hard to know. It's hard to know where to go. But, relative to this space, I think, what I said and what Rob said, and correct me if I'm wrong, there's all this opportunity in the broader Bitcoin or crypto ecosystem, right? With all the companies that are facilitating the growth of this kind of marketplace, and I would look for names in that area.
Well, I'm sorry that we've run out of time. Thank you so much, Fred Doppel and Rob Massey. It was fantastic. We could do 3 sessions of this. I also want to thank my partner, Dr. Denise Lucy of Dominican, and our program sponsor, Bank of Marin. We have more programs coming up that you may want to see. The first will be our next Business Edge briefing on November 3rd. And this will be online, 11 a.m. on Talent Wars, what employers need to do to win the battle to find and keep employees. And you can purchase tickets at Eventbrite. And then please join us for our leadership lecture series, which is presented by Dominican in partnership with Book Passage. On October 15th, there's an in-person event at 7 p.m. with fantastic Congressman Adam Schiff and conversation with Christine Pelosi. October 27th, also in person, 7 p.m. with Doug Talamy. And November 10th online at 5:30, one of the best Italian chefs, Lydia Bastianich. And all of those tickets can be purchased at dominican.extendedsession.com. Thank you so much for joining us here today. I hope that you learned a lot and whet your interest in learning more about cryptocurrency. And we welcome you to attend any of our future events and hope to see you at our next briefing. Thank you for joining us today.